Using the wave principle, we want to be able to identify turning points within the market well before they happen. Now, this week, the dollar declined in a big way. Uh, what we have in front of us is the 4-hour time frame of the dollar index, and this is on the TVC exchange. This is the official trading view exchange, and we want to understand what the dollar is doing and what it could potentially be doing next. Now, it's important we understand this because the position of the dollar right now is very critical in terms of what other markets could potentially do. Now, the dollar, as of now, is currently trading at 94.785, right? And it has found support at the moment and continues to rise. So we're starting to see some sort of price action at this 618 support level. The most important part about understanding and quite possibly using the wave principle is by having an alternate count. So we can look at the dollar from this perspective, but we also have to consider what else the dollar could be doing. So far, if you've been a follower of macro Elliott wave, then you understand that we've been bullish on the dollar since the May 21st low, right? So ever since the market did bottom around this level, we have been bullish on the market. However, we have made several calls for a bearish turn in the near future ever since we came to the latter stages of 2021. The dollar did continue to rise, but we are now at an inflection point. Now, what we have here is we have a picture of a potential bearish correction. So we're looking at a bearish correction in this picture. However, second of all, we are looking at the potential for this market to have already topped and for a continued market decline already. Now, this is just one view of the dollar. This is the bullish count. The bearish count of the dollar looks something like this. A sideways correction as wave 4 and a truncated fifth that has ended the entire correction of the dollar. Now, for example, we wanted to confirm to ourselves which view is going to come into fruition. The way we do it is we look at the high of wave 1 as our invalidation point, right? A breach of the high of wave 1 will confirm to us that this uptrend is over. So once we get a breach of 94.559, we know that this uptrend is over and the market is now bearish. What this would mean is that other markets as well as Euro USD, GP USD, AUD USD, NZD USD, all other currencies that we look at as dollar majors will also be turning to the upside. Remember, these currencies also fluctuate on their own, so the dollar will only be a direct influence to what they do. Most importantly, we can also use gold to try and identify where we are in the sequence. However, what this recent 5-wave move up tells us, as we can see here on gold, it does tell us that we are due for a bearish correction down towards the 618 or to the 786 for a sufficient move lower to see another leg higher. So this is what we're looking at from a trade setup perspective, but this also helps us consider a viewpoint on the dollar and what it could be doing next. This does tell us that we will potentially see some dollar strength, quite possibly today going into next week. Now, it will be very much important to see how much of this dollar strength or how strong we see this dollar upside to be in order to kind of come to a conclusion as to what the dollar is going to do next. Now, all we're doing here, guys, is using the wave principle to try and find a perspective and trying to give us an understanding of what the market could do next. Very simple, very concise. Hope this video was helpful. I'll see you on the next one. Make sure to follow us on Discord. Also, follow us on Instagram, which is on our profile page. And if you want pairs and updates, everyday updates on the major Forex pairs, get the wave forecast link in our bio.